Hello students, in this current video I will cover financial markets. What is financial markets? Financial instruments, features of financial markets. These three topics will be covered in this video. These topics are quite significant for finance students and it will be more helpful video for finance students. What do you mean by financial markets? Generally speaking, there is no specific place or location to indicate financial markets. In the sense what? Market is collection of buyers. In the sense a place where buyers and sellers will meet. It is a general definition of the market. But in case of financial market, there is no such specific location or specific place which indicates the market. However, in some locations, we do transactions related to finance. Right? So, financial markets can be referred to as those centers or places or arrangements, we can say, which facilitate the process of buying and selling of financial assets, financial services, financial securities and financial claims. Sometimes we do find existence of specific places even. As I told you, specific place will be there. There also we do these transactions, right? So precisely financial markets, there is no specific place or location, but in some specific places or location we do that, right? So this is called as financial markets. I hope I made you understand with this what we call slide. And see, listen to me carefully that I am providing the data as well as explanation. You can listen the video and understand. Besides this content, even you can read and understand also, right? Please do motivate me to make more qualitative informative videos. You can contribute this channel by using thanks button. You can make the payment also, which will be more helpful for me to create more content, right? And you can share this videos even with your friends also. When you come to the financial instruments refers to those documents which represent financial claim on assets. Like shares, bonds and debentures, these are the assets, financial assets which have a claim on the particular company's assets. Shares, suppose if you purchase equity shares, you are having a claim on equity share, you are having a claim on the assets of the company. That is called as financial claim. Financial assets refers to the claim to the payment of certain sum of money, that is principal, as well as interest amount periodically. Both is called as financial claim. Examples of financial instruments are bills of exchange, promissory note, treasury bills, government bonds, deposit receipts, shares, bonds and debentures. These are the examples. Financial instrument can be classified, in the sense can be divided into primary or direct securities and secondary or indirect securities. Right? So what do you mean by primary and direct securities? Whenever you directly purchase shares of particular company and debentures of particular company as an individual, as a institution, you are called as primary or direct security holders. When you called as secondary, when you purchase the units of mutual funds, in the sense what? Directly you are not investing in, not purchasing the shares, debentures. Instead, you are purchasing the units of the mutual fund which is on your behalf is purchasing the shares. So that is called as secondary or indirect securities. Here you don't purchase the shares of particular company. Instead, you purchase the units of which company? That is mutual fund company. Please bear in mind. Clear? I hope I made you understand this. What we call securities can be classified into three categories. One is short term, medium term and long term. See, the division short term, medium term, long term is based on the how long you will hold the securities in your hands. Clear? So short term securities are those securities which mature within a period of 1 year. If it is maturity period is 1 year, that is called as short term. If the maturity period ranges between 1 to 5 years, it is medium term. Then long term here refers to the time period is more than 5 years. So these are the basic way of division of short term, long term, and medium term securities. When you come to the features of financial instruments, these instruments must be easily transferred from one hand to another hand without any difficulty. They have ready market, they can be bought and sold frequently. Trading in these securities should be very easy. The financial instrument should possess the feature of convertibility into cash. In the sense, what you should be in a position to easily convert them into cash. Example is bills of exchange. You can convert these bills of exchange into cash by discounting the bill with the banker. The other feature is these securities can be kept as a security in the bank. In the sense, for raising the loan, you should be in a position to keep this security as a collateral and you can raise the loan. That should be also one of the features. Sometimes these securities will enjoy tax benefit. In the sense, when you invest in these securities, you will get some tax relaxation exemption from the government. Please bear in mind, all these securities will carry certain amount of category of certain types of risk, certain amount of risk even it will carry. You can lose part of the principal amount, you can lose interest, or you can lose entire amount even in some cases. These instruments will facilitate the future trading. In the sense, you can trade these securities, you can sell and buy to overcome from the fluctuation in the prices and interest rate. These securities require less handling cost. If you invest money in real estate, you need to apply more money in the handling of those assets. But if you purchase the financial instruments, you need not to apply more money in the handling cost. It will be quite easy. It will be there in your demat account. How long you wanted to keep, you can keep. Whenever you wanted to sell off, you can sell off. Whenever you wanted to purchase, you can purchase. This kind of a easy feature is available, that is handling cost will be very less. The return on these securities directly in proportion to the risk undertaken. See, if you invest in debt securities, return will be more. If you invest in equities, return may be different. So the risk and reward is directly proportional to the type of securities that you are purchasing. These instruments may be short term, medium term, long term, depending on the maturity of the instrument that we have already discussed. These are the basic features of the financial instrument. I hope I made you understand. Please do support this channel by sharing, subscribing, as well as contributing the amount so that we can prepare good quality content to the students of finance. I hope I made you understand. Thank you very much. Do subscribe my channel, Mentor the Trusted Guide.